Good day, everyone. This is your European Open briefing for Friday, July 1st. My name is Michael Florentiades. I am the Chief Economist here at XM. Here are the key points you should be aware of today. Risk appetite was very strong after some stimulus promises. We'll talk about that. But safe havens like gold and the Japanese yen were also holding. The euro was under some pressure after the EU ratings downgrade by Standard & Poor's following the Brexit referendum, and there was some speculation that the ECB is going to widen the scope of its asset purchases due to some constraints it is facing, mainly the securities with a negative interest rate, and also the percentage of bonds of a specific issue that it can hold. Now, sterling was also hit after the Bank of England stimulus promise by Mark Carney, and we had the data. We had Japanese inflation, the Tankan Business Confidence Survey, Chinese PMIs, and to come up UK manufacturing PMI and ISM manufacturing in the United States. Also, the ECB's chief economist and the Fed's Loretta Mester are on tap to speak. Now, as we talked about, there was there were strong gains by risk assets, and we focus on the FTSE 100. It is definitely having a good Brexit so far because it closed around 6,300 on the day of the referendum, but a weaker pound plus yesterday's promise of more stimulus from Mark Carney has led it higher to around 6,500. Of course, there are many multinationals in the index, but there are companies listed on the London Stock Exchange, so that is quite interesting. Now, the S&P 500, actually one might say, is suffering a little bit because of the stronger dollar, as the dollar is a safe haven following Brexit. It's not doing too badly either, actually. It's around 0.5% away from its pre-Brexit levels. And what is the justification for that? It may look quite strange. Well, risk assets are taking a wait-and-see approach, it seems. We know about the very big uncertainties. What is going to happen, it's much less clear. But at the same time, they are taking comfort that central bank stimulus is coming. In the case of the Fed, interest rates are going to remain on hold, so they found this opportunity to stage a very strong rebound and reclaim the ground that they had before Brexit. Now, the pound, of course, was hurt by this stimulus talk. The pound was trying to stabilize above 134. Talk of fresh stimulus, summer stimulus, as we would call it, as Mark Carney said that would be monetary stimulus during the summer. Now, in my view, this move from the Bank of England is a little premature. Possibly what the UK economy needs is more certainty about what the next steps are going to be and what its model of relationships with the EU are. This is the important thing to determine rather than lower interest rates and even more money. But okay, the Bank of England feels that it needs to stimulate the economy. Now, the pound's fortunes might have been even worse, but there was news that Boris Johnson, the Leave side's most popular politician, was not entering the Conservative leadership race, and that the most likely person to succeed Cameron was now Theresa May, his Home Secretary, former Home Secretary, still his Home Secretary, of course. She backed Remain, and she appears to be a pragmatic politician who might be able to conclude a deal with the EU faster than others like Boris Johnson, for example. Now, despite the good news for risk assets, gold is also holding up well. It's broken through the 1330 level, and it's possible that risk assets are being bought together with some safe havens as a hedge. And gold, of course, also benefits from promises of monetary stimulus. And as an illustration, the other safe haven that we'd like to see was the Japanese yen. We saw dollar yen trying to peak above 103, it reached 103.4, but it failed. It has come back down to 102.65. Why is this significant? It shows that the safe haven yen is still in demand, even at these levels. On to our calendar, as you can see, Japanese inflation was roughly in line. The Tankan Quarterly Business Survey, it's a survey taken by the Bank of Japan to judge the sentiment among the companies in the country. It was overall, as you can see, a little bit better than expected. So somewhat positive overall. Maybe for the small non-manufacturers we have some disappointing readings, but overall I think that the Tankan was not so bad, didn't show such bad signs. Chinese manufacturing PMI was bad. It came in at 48.6. Last month it was at 49.2. The Caixin manufacturing PMI. So it shows that manufacturing in China is still facing problems, and maybe this will lead to stimulus. And this is why we also saw the Chinese yuan falling to a fresh 5.5-year low versus the dollar today. For the remainder of the day, we have final Eurozone PMIs, Eurozone unemployment, and UK manufacturing PMI. It's unclear though that whether this PMI, the UK's PMI, is going to include any post-Brexit data. And finally, the data from the US session include market manufacturing PMI, ISM manufacturing PMI, and construction spending. That's all from me today. Thank you very much for watching and have a great day.